Good morning. Welcome back to Market Monday, and thanks for joining me each week. So continued good news in the housing market. We're super excited. We had 94 sellers commit to putting their house on the market coming soon. 94 of those and 221 new listings, so well above 300, and that's great news for our buyers. And it also actually is good news for the sellers. So we had 264 that went contingent last week. We had 119 that went pending. The pending are houses that the contingency has been removed, or they are straight cash deals that are going straight to closing with no appraisal, sometimes no inspection. Pretty competitive market. So we are seeing a lot of full price cash offers this year, definitely more than we've seen in a while. So we had 261 houses that sold and closed last week. So as you can see, we had over 300 come on the market and 261 that went off sold. So that is a big difference in what we were seeing previously. The solds were definitely outpacing the new homes, which was causing and contributing to our housing shortage that we have been having this year. So we currently have 933 houses in the region available for sale. This is the same number that we actually had last Monday. So this is great news, and 137 new coming soon. So well above 1,000 houses. We've been running around 700. So this is awesome that we have about 300 more houses for our buyers to choose from and for our buyers to take a look at. So a couple of areas that I like to point out information about. Oregon, they currently have 23 homes available for sale or coming soon. 16 homes in Point Place. Oregon had 2 new ones last week. Point Place had 3 new ones last week. These numbers are down a little bit. Coming soons, we didn't have any coming soons in either of those areas. The contingents and pending, Oregon had 4 that went contingent or pending last week, and Point Place had 5, and 5 sold and closed. 5 sold and closed in Oregon last week, and 6 sold and closed in Point Place. So these numbers, Point Places was up a little bit, and Oregon was down a little bit, but we'll continue to watch these 2 areas. I'm from Oregon, and I currently live in Point Place. So I like to keep my finger on the pulse in these 2 areas. So the June statistics are in. So we always look at year over year. This is a little bit different format than what we're used to seeing, but you can see we had 632 new listings in June. That number is actually down from June of last year, where we had 658. June of this year, we had 539 houses that went pending to close, and last year we had 536. So though we had a little bit less new listings, we actually had more that went pending and off the market. And then 546 closed this year, over 549 closed last year. The average days on the market, though, you can see last year was about 83 days. It's taking only about 59 days this year to sell a home. The average sales price has went up considerably since last year. Last year, our average price was $169,435. This year, it's up about 11.2% to $188,397. Most offers that are being received, we are seeing a significant number of these that are above list price. So the average, we're actually selling homes at about 101.9%. So just a smidge over list price. And then the number, our inventory is still down about 23.5% from last year. So we have we had in June, 945 houses available, our inventory. And last year in 2020, we had about 1,235. So you can see even last year, we were having a shortage of homes for sale. And it has actually gotten a little bit worse this year. So we have about what's called months of inventory, and that's how many months it would take us to sell the current inventory that we have. Last year, it would take about 2.9 months. And this year it's down about 34.5%, with the average month supply that we have is about 1.9. We have about 1.9 months of supply and inventory. So numbers that are definitely super important to keep track of if you're thinking about buying or selling. Zelman's did their broker report in June, and they polled the buyers, and they're saying that the overall home buyer demand rating was down a little bit from 88 to 86%. We have started to talk about what's called buyer fatigue. Buyers have written a lot of offers in the market, some of them not having been successful. So they're getting a little fatigued at writing offers and looking at houses. And so these respondents of these surveys were polled, and they asked the buyers if they thought it was a really good time to buy a home. And when they were polled in April, about almost 50%, one of two, said that they felt like it was a pretty good time to buy a home. But when they were polled in May, when we started having this competitiveness on the multiple offers situations with the new listings, only about 1 in 3 now felt that it is a good time to buy a home. But of course, we do know that it is a really great time to buy a house because interest rates again last week dropped. So historically, it is an amazing time to lock yourself into a 30-year mortgage and get that really low fixed interest rate. Our showing time index for May also had depreciated a little bit, the number of showings that we were having. Comparatively, though, this is what we have to keep in mind. Yes, it was a little bit slower in May. Buyers were starting to get a little fatigued. Definitely numbers down from March and April, which is your typical high spring market. But if we look at the numbers from last year in March and April and May, the number of showings, the showing index is definitely significantly higher than it was last year. So even if we look at May of this year at 248.6, May of last year was only 166. And even June and July, we're only like running around 199, 200. So we're still at 258.6 on our index, which is considerably higher than it was last year, but definitely a little bit lower than March and April. So we started to talk about this buyer fatigue. We've seen record price appreciation, somewhere around 8, sometimes in some areas of the United States, 12%. We have an extremely low inventory. We've been talking about that. We were running around 700. We're well up over 1,000 now, which is definitely good news for July. We are expecting inventory to rise in the third quarter, and we've been projecting and we're expecting, but as you can see, it is happening. So this is great news. So this extremely low inventory that we've had is the market's starting to soften. We are getting more inventory. So this is great news. We have record high sales prices over list price. We just talked about that, 101.9% of list price. So you're getting sellers are getting more for their homes than they're actually put on the market at. Record low number of days on the market. We just talked about that. Going from 2.9 months of inventory to 1.9 months of inventory. So the time that the houses are staying on the market, they're definitely selling quicker. And again, we've touched on this historically low mortgage interest rates. So they did drop again last week, and I think the week before too, if I'm not mistaken. And so it's just good information to know, because you can buy a home in today's market that may cost, let's just say, an average 30-year fixed mortgage, and your house payment is $850 because of the low interest rates. Back in, say, 2011, that same mortgage payment would have been about $1,326 or $1,356. So you're saving about $500 a month because of these lower interest rates. So you are absolutely able to buy more house for less money. And people ask all the time, how does everyone afford these big houses? Well, there's one of the reasons, because the low interest rates allow you to buy more house for less money per month. So we have been talking all spring that we expected a turn in the market. We're expecting the higher inventory. That's already happening. The market, don't let this fool you though, because the market is still very hyper competitive, because historically over time, we are absolutely still way below the number of homes that we usually carry in our market, which is usually around 4,000 or 5,000. So great news, we're well up over 1,000, but we need those numbers to come up even higher to get rid of some of this hyper competitive market. We do see in the summertime that our serious buyers, they're like winter buyers. Winter and summer buyers are very similar in the fact that they are 100% or 110%, I should say. They commit, they are all in, and they are going to find a house. So summer buyers and winter buyers are great buyers because they are super serious. And one thing to just keep in mind as we're going through these changes in the housing market, don't get left behind. Make sure that you're following along. Make sure that you're keeping up to date on what's happening. Make sure that you have a full-time realtor who has their finger on the pulse and knows what's happening. So you can see we have not had a really good seller's market since the end of the 1990s and the very early of 2000. So it does shift about every 10 years. You can see we've been down in a seller's market for a few years now. Eventually, will it shift back to a buyer's market? Well, if trends continue, likely it may or will. But right now, we just continue to be in this seller's market. So, but the funny thing about today's market, it's a great market for sellers. If you are a seller and you are thinking about selling your home, please feel free to reach out to me. I'd love to talk to you about what's happening in our market and what all this means to you specifically in your particular home and your community. But you have to remember these lower interest rates and the fact that people are buying houses for, say, $300 to $500 a month less their house payments. So you can see also another thing that changes what's happening in the market right now. So this shortage of houses or the lower inventory is based on the law of supply and demand, where back in 2008 and 9, right before we had that big housing crash, we didn't have equity in our homes. People were well over mortgaged on their homes. That is not the case anymore. So it's important for people to realize how many people actually, 38.2% of people actually own their homes free and clear. That number was significantly less back in the 2008, 2009 period. The equity that people had in their home was almost non-existent then, where we now have our current average equity of mortgage loans across the United States is $216 million in equity. So equity is a huge factor in why we're not going to have a housing crash or why we're not in a housing bubble this time. We have a 19.6% increase in equity, totaling over 1.9 million or 1.9 trillion actually in total equity in homes. And it's an average gain to the American person who has a mortgage of $33,400. So equity in your home allows you to not have to foreclose or go into some kind of forbearance program or have to do a short sale. And these are the things that are keeping the housing market in a very different position than what we were in 2008 and 9, right before the housing bubble and the crash. So things are just very different. It's important that we realize and we acknowledge that this situation that we're in, the house appreciation prices and the things that are happening with the housing market have to do with lower inventory, the law of supply and demand, and definitely not the situation, the bubble that we were in back in 2008 and 9. So just real quick, it does look like the inventory is starting to inch up. We've already talked about that. We are seeing significant week over week gains in inventory. This is great news for our buyer. It also allows the sellers, the buyers, to have a little more to choose from. But homes, because we are still in this hyper competitive market, sellers are still selling their homes very quickly, 1.9 months of inventory. So again, we've talked about supply is expected to improve, and it does. It's already starting. We expected third quarter to be definitely starting to see more inventory. So again, my name is Brenda Kilburn. I am a full-time realtor with RE/MAX Preferred Associates. I am here to help. If you just have questions, feel free to reach out. If you want to know what this means to your particular home in your community, let me know, and I'm happy to look at that and discuss that with you too. Thanks for joining me each week. Please follow me on my RE/MAX Preferred Facebook page, Brenda Kilburn, RE/MAX Preferred. There's lots of great information on there. You can also tune in to my YouTube channel. All my Market Mondays are on there, so you can keep up to date week after week and see how things are changing and what's happening in the market. So I hope you have a wonderful week, and I will see you back here next Monday. Have a great day.